Hello everyone, great to have your company on Kalkine TV. I'm James Preston and you're watching the Buzzing Trends. And in this edition, we're focusing squarely on 3 ASX energy shares that you should be keeping a lookout for. Oil prices fell to $10 on Friday, their biggest dip in a one-day period since April 2020, as a new COVID-19 vaccine-resistant variant of coronavirus, Omicron, threatened the Australian economic recovery and raised concerns that a supply surplus could swell in the first quarter. Australian energy stocks particularly fell 4.6% on Friday, their biggest dip since September 2020. Traders sold in panic on fears that Omicron has the potential to put countries back into lockdown mode and hurt the travel market. Brent crude ended down by 11.6% to $72.72 a barrel, a weekly decline of over 8%, and US West Texas Intermediate crude settled 13.1% lower at $68.15 a barrel, falling over 10.4%. Meanwhile, the US last week announced plans to release 50 million barrels of oil from the Strategic Petroleum Reserve to curb rising fuel prices. China, India, Japan, South Korea and the UK were also planning to release some of their reserves. In such a scenario, investors and traders would be closely tracking a few big names in the Australian energy sector, and these stocks have fallen as much as 3% in the last 5 trading sessions, presenting as a good time to potentially include them in your portfolio. So let's begin with Oil Search. Oil Search is the largest oil and gas exploration and development company incorporated in Papua New Guinea, which operates all of Papua New Guinea's oil fields. In the last 5 days, shares of Oil Search have fallen by 2.92%. Other than concerns over rising prices, investors are also concerned about reports claiming that the company's former CFO is suing the firm on allegations of bullying, intimidation and harassment. The stock itself, however, has given a year-to-date return of nearly 6%. In the past 1 year, the stock rose over 9%. In terms of recent developments, Oil Search and Santos last week provided the following update in relation to their proposed merger, which was announced to the ASX on the 10th of September 2021. Oil Search shareholders are set to vote on December 7 on a merger with Santos after gaining approval from a Papua New Guinea court and a mixed endorsement from an independent expert. The PNG government had previously raised concerns about the $8 billion Aussie acquisition by Santos, saying it would harm national interests as it could result in a foreign firm holding too much of domestic oil and gas resources. As for Santos themselves, they are an Australian energy company and act as the country's second largest independent oil and gas producer. In the past 5 days, shares of Santos have fallen by 0.3%. Santos' share price is under pressure despite its mega merger with fellow ASX 200 energy share Oil Search inching closer and closer. The stock has given a year-to-date return of nearly 1%. In the past 1 year, the stock has risen by more than 5%. As for some of the developments in recent times, Santos is partnering with Australia's National Science Agency, CSIRO, to develop what is hoped could become the lowest cost direct air capture technology in the world. The collaboration will continue to develop CSIRO carbon assist technology, which removes carbon dioxide directly from the atmosphere in higher concentration post-combustion scenarios. The CO2 can then be safely and permanently stored as part of a carbon capture and storage project or used to make carbon-based products. Time now for a very short break before we take a look at Woodside Petroleum on the Buzzing Trends.
Hi, I'm Sage, and get ready to take the crypto ride with me on Kalkine TV. Watch the Crypto Buzz every Tuesday and join the excitement at Kalkine TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching Kalkine TV.
Thanks for joining us on Kalkine TV. I'm James Preston and this is the Buzzing Trends live from Sydney. In this edition, we're focusing on 3 key energy stocks that have seen recent dips which potentially present an attractive buy-in period. We've already analysed Oil Search and Santos. Let's now focus on our final stock, Woodside Petroleum. Woodside Petroleum is an Australian petroleum exploration and production company. Woodside is the operator of oil and gas production in Australia and is also Australia's largest independent dedicated oil and gas company. In the past 5 days, shares of Woodside Petroleum were unchanged. The company has announced a merger as well with BHP Group's oil assets and its Scarborough project. The two companies have signed a binding share sale agreement. Additionally, Woodside has made a final investment decision for the Scarborough project and Pluto Train 2 development. Meanwhile, the stock has given a negative year-to-date return of over 6%, and in the past 1 year the stock has fallen over 3%. And in a recent development, Woodside Petroleum and BHP Group gave their final go-aheads to spend 12 billion Aussie dollars to develop the Scarborough gas field in Western Australia and expand the Pluto liquefied natural gas plant, with the first cargo expected in 2026. Well, that's all for our report on this occasion for the Buzzing Trends. Hope you enjoyed us taking a deep dive into 3 ASX energy stocks. I'm James Preston, and until next time, have a terrific day and continue your positive trading.